First, we must choose the period in which we are going to perform the operations. It can be the one we want. After we choose that period, for example 5 minutes, we are going to choose a period 8 or 6 times greater, for example 30 minutes, since 5 times 6 minutes equals 30 minutes. In both periods, we are going to place an EMA, exponential moving average, of 50 periods. And in the 30-minute one, in the example, we will also locate a 20-period EMA to know when there is about to be a change in trend. We can modify the style and change the thickness to our liking. If the average of 20 crosses the average of 50, there will probably be a change. In the largest period, 30 minutes in this case, we are going to locate the trends, whether they are buying or selling. These trends will serve as a filter for the shortest time chart. Once we have located the trends and set the EMAs, we go to the chart with the shortest time, 5 minutes in the example. If in the 30-minute period we are in an uptrend, in the 5-minute period we will only buy. If in the 30-minute period we are in a downward trend, in the 5-minute period we will only sell. Let's go to the example of the 5-minute chart with an upward trend in the 30-minute chart. That is, we will only buy in the 5-minute chart. It is the same with a downward trend, but with the stop loss and take profit reversed. We're going to buy only when the price breaks below the 50-period EMA and then turns back, at which point we are going to buy. Once we buy, we will place the stop loss at the last grand low below the EMA, and we will place the take profit when the price closes below the EMA, as long as it closes below the EMA, but we have a risk-benefit ratio greater than what we risk. If we risk $100 in the stop loss, we will take the take profit only if it generates $150. Otherwise, let the operation run now, either until you take the profit or until you touch the stop loss. Now, let's see a downward example. We find a downward trend in the 30-minute chart when the averages are crossed, and we go to the 5-minute chart to carry out the downward operation. Remember that this time we will only sell. We're going to sell only when the price breaks above the 50-period EMA and then turns back, at which point we are going to sell. We will put the stop loss above the last grade maximum, and the take profit when the price closes above the EMA, or when it generates a risk-benefit ratio of 1.5 to 1, that is, we risk 1 to get 1.5. In this case, the operation failed, since the price touched our stop loss. Let's try another one. We wait for the price to be above the EMA and turn back. We put the stop loss and wait for the take profit. In this case, the operation was a winner. It is possible that we will have more losing trades than winning ones, but thanks to our risk management of risking 1 to get 1.5 minimum, we will end up making money. I hope that this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy already that we upload the best strategies every week.